My mic wasn't on. Good morning. We are live, I think. I believe. Welcome. Today is a facecam day. A couple of people requested that on the last live streams, but I was never really interested in it. Today I just set it up because why not? I don't want my music to be too loud. Okay. I think I'm gonna just dive straight into it and talk about what I've been looking at USD wise. So I tweeted on Twitter. I said how we've got a let me just make sure that my mic's let me make sure that typically what a new monthly candle entails is an opportunity to predict or anticipate a Judas swing. So what that means is you anticipate the manipulation. I'll explain here. For example, the monthly candle open was right here at this price. Let me annotate it. It was this price right here, if I'm not wrong. Yes. So this is a bullish candle at the moment. Price has pushed all the way up to this location right there, which will have a reason, and I'll break it down. But you essentially, when you have a new candle open or a new candle about to get generated or generate, you want to mark out the open price of it. So with the monthly, we mark out the monthly open price of the candle, and then we see if there's anything of which the monthly candle can create a Judas swing, a manipulation, a liquidity sweep before it distributes the other direction. In this specific moment, we're not in a very good spot. I'm bearish for USD. I'm very bearish with it. But we are in a gap which seems to be towards the discount of this range. We are very choppy, so you can't really anticipate a clean move at all. But yeah, we're in this gap right here. And the reason why I anticipated bearishness was because, first of all, when you anticipate a price direction, you want to have a clear location of which price may be reaching into. So now in this case, we've got the previous candle low. We've got another low here, obviously the previous candle low, and ultimately a swing low on the monthly. So this is very far. This is one of the, I guess, DOLs you can use. But we've got this one, which is the previous candle low. On the weekly, you can tell it's a swing low. And the reason why I anticipated for this week, or perhaps the whole monthly candle, to be bearish is because we've tapped into this gap right here. And it was on a Monday, which was yesterday. Yeah, Monday right here. And on this Monday, we've tapped into what seems like a order block with a gap but before it. Give me 1 second. But anyways, the whole point is that the monthly candle seemed to have created some sort of a Judas swing, with the day of the week being Monday and the week number being the first week of the month. So in my opinion, that's high probability Judas swing territory, or high probability conditions for a Judas swing, which means you can anticipate price to do something and is quite predictable. Not always, but it can be. So in this case, this is the new monthly candle opening right here, and as you can tell, price pushed to some sort of a location, which in this case I would assume this is an inverted fair value gap. I'm not sure, but I just call it a gap anyways because it is a gap, although it's been filled. And yeah, ever since that location there, when I reached there, I said that I am bearish with USD. I think I can pull up the tweet. Do I have it? I don't even know. Yeah, here we go. Oh, my web browser is not cooperating. How do I do this? I'll just do this. Here we go. Yes, as you can tell, the EU monthly candle seems bearish. This was 20 hours ago, so that was a while ago. And I've been anticipating bearishness ever since, with the draw liquidity being, like I said, down here. We are trying to make our way down. So once we make our way down there, then I could anticipate a different direction or perhaps a continuation. We'll see. I haven't taken any trades. I haven't been trading at all. I'm just analyzing and learning, to be honest. Sometimes creating content, working on other stuff. But when I am able to trade again properly, then I'll show you guys the model that I've taught on this channel, 159. It's the same thing. I'm going to be using it. I'm going to continue to use it. Predominantly because I've seen it repeat like crazy. So I think it happened yesterday. Yeah, it did. So yeah, just yesterday. The same thing, exact same thing as I've been explaining forever. There's a gap here, which has been created on 9 a.m. actually. And then just yesterday on Monday, we had the Judas swing. We had 1 a.m. candle, UTC -4, 1 a.m. candle, Judas swing into this gap, and then distribution down the other direction. Once we reach there on the 4 hour, we can switch to the 5 minute. Go there. And now there's different ways you can trade a direction once you've actually got a bias. So for example, I get it from the 4 hour. The 1 a.m. 4 hour candle taps into the gap, which starts around here. And then you just look for market structure shifts, basically. I mean, as you can tell, once we enter, so the first entry into that gap would be here. We get a move down, but there isn't really a swing low here to have a market structure shift, if you know what I mean. So this is a gap. We go into it. It doesn't fill it fully, but then we keep moving up. And then we have a low, 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 another low, 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 which neither or any of these get taken out. So what that entails to me is that the market is not ready to either reverse, go the other direction, or just change the direction. Generally, it doesn't have to reverse. Maybe it could retrace. We get a hint of that when we have something like a high, for example, here getting taken out from this, which it isn't the cleanest takeout, as you can tell. It's just the wick, but we have this move taken out that high, and obviously the rest of the highs here. On the 15-minute, this will look a lot cleaner. I'm sure. Here we go. So we have this high taken out, and then we have a low, or whichever low you want to classify within the range, taken out again. And then we have a retracement, which is the thing that I've explained, into a gap on the 5-minute. See, here we go. Right here, with distribution towards bearishness, and it's the same thing. This was news, I believe, so you want to keep that in mind. But yeah, 4 hour gap, 1 a.m. we have a market structure shift of some sort. It's not the cleanest, but it it happened. On the 3-minute, I think it was cleaner. My mouse is acting up. On the 3-minute, I believe it was cleaner, but I'm still learning to practice the 3 a.m. The 3-minute. I'm only trading the 5-minute at the moment. So yeah, it's the same thing. Nothing's changed, and maybe in the future, when I reach the levels that I want to reach and trade in, I will look back at these videos and think, wow, it was right in front of me the whole time. Because if you look at one of my oldest Twitter videos, I think it's there. Let me find it. It was made in 2023 December. This was before I even gave the whole concept a name, or I even came up with it. It was just accidental. I traded it, and if you look back at that video and look at the things that I've been teaching here or in my other videos recent months, it's the same exact thing. Yeah, here we go. So I'll show you. This is a video I posted on October, actually, not December. I think it was October here and December on Instagram. I don't know. Yeah, October, 4 hour premium, fair value gap, 5-minute. And back then I used an OTE, which is pretty much what we do today, like the fair value gap. But sometimes, OTE does not offer itself, so you just have to take the nearest gap offered for entry. It's the same principle though. So 4 hour, fair value gap, 5-minute OTE. And considering this was in premium, I'm assuming this was a sell. I don't remember fully, so yeah, it was a sell. So yeah, exact same thing. I mean, if you look at this visual, for example, from the video that I posted a long time ago, 4 hour gap right there. This must be 1 a.m., 5 a.m., or 9 a.m. Maybe we can check in the video. Let me see. I don't know if I show it, but from what you guys have seen and what I've taught you, you know that it's more than likely there will be 1, 5, or 9 a.m. And if it isn't, then you don't really trade it. Let's see if I can find a timestamp where I do show it. Yeah, this is the DXY, by the way, so I would get the bias here, which would be bearish, and then I'd be buying your USD essentially. Oh, wait, here we go. Maybe I could get something there. This is, yeah, see, buying your USD. This was very good execution. This was a very good execution. Anyways, yeah, I can't find the time, but it would be 1, 5, or 9 a.m. There's no other reason for price to do that from what I've experienced. Anyways, yeah, 4 hour, 1 a.m. We've tapped into a 5 minute. Same stuff. Nothing's changed. Nothing will change. Nice streaming setup. Thank you. Thank you. Welcome. I didn't expect you to be on it. I just set it up. It took me like 3 minutes, 4 minutes. I've been wanting to do a face cam for a while, but I'm not sure if anyone has ever seen me before, so. Hello? I was a bit ill a couple of days ago, or a week ago. Still kind of recovering. My throat like is not the cleanest, so I'll be fine. But with that being said, let's see if we can find the model. Oh, one thing that I learned, excuse me. One thing that I learned from backtesting is that this model, or any sort of approach that you might have yourself, which might be, I don't know, order block, supply and demand, what else? I don't know, support resistance, Fibonacci sequences, whatever you trade. I've learned from trading that the bigger the distance between the two price points of which you will use, so one is the reference, for example, this is my reference point, 4 hour gap, and then this is the price points of which I will be trading away from, right? The bigger the distance between those two price points, the more probable your trade is. That's what I've just learned. I don't have statistics for it. I don't have results for it. I don't have like a backtesting file with data. It's just from experience. Like whenever you have something like this, for example, let me see. For example here, right? You have a gap right there. You have a move into it. And you have, let's see, 1 a.m. here. Wait, sorry. Let's start here. You have 5 a.m. here, 9 a.m. here. Then you have another 1 a.m., 5 a.m., 9 a.m. And then you have another, let's see, 1 a.m., 5 a.m., 9 a.m. And as you can tell, neither of these are sustained and clean moves. Now, however, you have a little swing high and price kind of retraces, so it's, you know, moving up and down as it's creating space between two gaps. And now we've moved away from this one. We've got a different one which price may be interested in, and as you can tell, 9 a.m. reversal, as I've talked to you guys about, it's a lot cleaner. This is a huge move. If you measure this, from wick to the bottom, it's 22 pips, and you can capture some of that for sure. But besides that, you get it again the next day at 5 a.m. And then the next day, you just have huge distribution. It doesn't even tap into it. So the point I'm trying to make is the bigger the distance, which as you can tell here, it is a big distance, but not huge. Here, it's even bigger. And price is a lot cleaner from the moves. Here, specifically in here. This is 9 a.m. This is 1 a.m. I don't even need to explain anymore. If you watch my videos, you know, I might just, you know, say 159 in the future and not even explain. If people watch my videos, they know what I'm talking about. This is 1 a.m. and yeah, this is further. This is the closest to that gap. This is the second closest, and this is the furthest, right? So as you can tell, price has moved a lot further away from that gap on the third attempt, or whatever, fourth, fifth. The point is that the further the gap is, or the price reference point that you've got for your trade, the more likely it is the price will actually move away from it. Now, I think from a logical standpoint of view, I think I just got a message. Yep, give me 1 second. So yeah, I don't even know what I was saying. That's not good. Just generally speaking, the reason why I think it logically does this is because when a market extends too far up, and there's someone that talks about this, I'll find him and I'll tell you about it, because he's someone that's very good. He's been verified in terms of payments, and he's shown statistics of his results. But he talks about this briefly, and I haven't watched this full video. He says he gives reasons to why he trades extended markets only. And I didn't even need to watch the full video because I kind of understand. When a market goes one direction completely, it's a lot easier to predict and anticipate it to come back down. There's certain key levels in the market of which price can stall, retrace, reverse, or stall, retrace, reverse, or even consolidate, I guess. Those price points are either liquidity points or just places of imbalances, so inefficiencies, which we call gaps, fair value gaps, whatever, right? So now, for example, I'll give an example of when I stopped investing into the S&P 500, which was around here. So right here, I think it was, let me see, I need to make sure, I don't want to be wrong. Yeah, I believe it was the monthly. On the monthly, who's that? On the monthly, we had a huge move up to that point, which was into a gap right there. Now, on top of that, I think it collected that high. Sure, we can classify that as a reason, but my reasoning was the weekly gap right there being tapped into and completely, fully rebalanced or disrespected. The reason why I closed my positions on S&P 500 here on eToro was because of that. On top of that, I think it was, who was it? It was someone important who said he sold a lot of his positions or closed a lot of his positions, long-term positions on S&P 500. So that's somewhat of a fundamental analysis mixed with technical. But the reason why I primarily did it was because the market had moved a lot and it was extending up. And then what do you see? You see a certain location on price of which you could liquidate or exit your position from. So that's what I did. Obviously, you've got another gap here, and I think that's the only cleanest one. Yeah, you've got a gap here, a tiny one there, and you could have exited at any of them. I exited right at the beginning, so right there. It doesn't even matter. But the point is that a market is a lot more predictable when it has extended a certain direction for so long, to the point where you can kind of just know that it would be stupid for it not to come back down. So I can show you an example. I can show you a different example. The higher the time frame, the more visible this is. Let's see. I'm not trying to cherry pick. It's going to be the exact same things that I've said from the beginning of this channel. 159, 159. I'm not going to change anything. I'm not going to try and teach you anything new. It's the same stuff. And at the end of the day, this is a completely free live stream, completely free video. Don't make anything, to be honest, like PDFs or anything like that. So yeah, 5 a.m. Let's see. I can give you examples, but they're not good ones. So like here it happens, but it's not a hugely expanded market condition. So I mean, yeah, let's use it as an example, although there's another one there. So we have here 5 a.m. We deal with 159, like I said. 5 a.m. taps into a gap on the left, and as we've seen, market has shown intention to push up higher. So we've had 1, 2, 3 consecutive 4-hour candles showing bullishness, a retracement which did not disrespect this gap, I don't believe. No, it didn't. And then 5 a.m. retraces. My mouse is acting up. I think I have to plug it in. 5 a.m. retraces into a premium gap, and once that happens, like I said, the bigger the distance between the two reference points, like this gap and this location right here, the better the probability of that trade direction playing out. So in this case, I would 100% be bearish, just based on the context of current market condition and market current condition, context, and everything. We are in premium right here. There's a premium gap. I am bearish, and then I'd be looking for a market structure shift there, etc. Right? So this gap tap is obviously further away, and as you can tell, as I explained earlier, and I showed you a recent example, the same thing happened. So I'm not sure how to quantify that, because there are times where gaps get tapped into the day after it gets created. So like let me give you an example. Give me 1 second. Give me 1 second. I'm back. There we go. Sorry about that. I had to take a call. You're back. Did you turn your mic volume higher? I don't know why it's quiet. I apologize for that. Let me try and fix it for you. Because I did have a suspicion that it was quiet. You can see my stuff here. Nice. Let me get rid of noise suppression and voice volume is all the way to the top. Oh, here we go. Okay, so I'll put my mic volume to 80. Hello. I hope that's not too loud. If it is, I'm sorry. But hello, Hydrus. Welcome. So yeah, I hope that's not too loud. If it is, let me know. I'll keep my mic here. I won't get it too close to me. As I was explaining, simple stuff, the exact same things, and you need to backtest this yourself, figure it out yourself within your trading system parameters. So there are times when there is a gap of which price comes to fill. It happens literally the next day. I think this is an example of it. It's within the same day, actually, which, you know, says a lot. So this gap gets created at 1 a.m. 4th of June, the beginning of this month, or the previous month, sorry. And then the same day, 5 hours later, the gap gets tapped into, I think, no, this is the first one, so it's 9 a.m. And then the next candle, 1 o'clock, the gap gets fully tapped into, and then we see a move down, taking out sell side liquidity. So this happens, but it's my personal opinion. Actually, you know what? Let me keep the chat open on my phone because I have to keep doing this. Give me a second. Yeah, when price does this, you know, it can show the intended move of which you may be anticipating. But it is my personal opinion from experience that when there is a bigger distance between two price points, like this gap and this swing high right here, or yeah, this one or this one, whichever, this is a swing high. When there's a bigger distance between those 2 points, I believe that distribution is a lot more predictable and easily readable and easily tradable, in my opinion. That's what it's a term called extended markets, and it has to do with exhaustion, it has to do with liquidation, it has to do with lack of liquidity. So when a market goes one direction only, it needs sellers to pair their buy positions with, and to go down, it needs buyers to pair their sell positions with. So the big players, right? Or as some goofballs call it, the smart money. So yeah, let me just keep my stream up just so I can read the chat. How did I short? I didn't short it, but the model I teach in my videos, it's there, the exact same thing. I haven't traded in a while. I've only taken a minimum trade on my funded well, challenge. I've taken a 0.01 lot size trade just so I can keep up with the rules, but I don't trade anymore at this point. I'm short on EU. Yeah, same. I agree. I want to buy EURUSD because I see it being influenced by seasonal tendencies. The Williams percentage R is overbought, and a liquidity sweep has left an inversion fair value gap on the 1 hour time frame. Right? So you are long. You mean this? How to learn ICT? Study his videos, my friend. Study his videos. You know, at some point I would go into length and detail with stuff like that, but it's that simple. Just study his videos, watch his content, watch his mentorship lectures, take notes, practice it, backtest, collect data, execute, demo test, everything. Just keep doing it. The less you ask and the more you do, the more you profit and the less you lose. That's my motto personally. And yes, I made that on the spot. So I showed you some examples of what I meant. I showed you a recent example, which was this 4-hour tap. It was literally yesterday, and then price has just melted down beautifully ever since. Not sure why this monthly candle is still showing bullish. Like, I get it, there's been a judo swing, but I'm definitely betting on this candle turning black or red for some of you within the next few days. That's my anticipation, just from the way that the market's moving right now. But we are consolidating, so keep that in mind. We're not trending. Like, this is a trend, this is a trend, right? This is another trend, and this is just choppiness. So usually before a trend happens, you get a liquidity sweep, right? Why are you not trading? Just haven't managed to be honest. I'm working on things outside of like trading, outside of content creation. That's why I haven't uploaded a lot. It's personal stuff. But I've been annotating. I've been doing analysis every single day, taking notes, like daily journaling. And the trades I was supposed to be taking, I just journaled them, really. That's it. I wish I had more time to commit to trading. I wish I had more time to commit to live streaming and YouTube, but with time that will happen, and when it does, I will teach everything again for free, as per usual. I could trade right now, I just don't really see a trade setup. So at this current market position, I'd be looking for sells only, and we are nearly in discount. I wouldn't be wanting to trade here at all. I'd be wanting to trade within this location here above. But yeah, we have a weekly premium gap tap, and now we are just expecting, let me check the news actually. We're expecting bearishness, or I am personally. And BPRs, I'm not sure what you mean. I don't know what that is. BPRs, I might know, but I don't know the letters for it. I don't know what that means. 1.06713. My phone is right there. Why am I checking? Am I right? 1.06713 is your prediction. But where is that? Let's see. 1.06713. Keep checking my right. Stop it. Yeah, exactly. That's why I was explaining at the beginning of the stream. That's pretty much the same. The body low of these candles, and there's obviously equal lows here generally. So that's where we're trading towards. BPR is an ICT concept. It's inverse fair value gap in a fair value gap. We got tapped this Monday on 4-hour. Right. You mean this? Is that what you mean? Why is my mouse doing that? I think that's what you mean, this one. But yeah, if you were in the beginning of the stream, you would have heard me explain how we've used the same 159 method with this gap right here. The exact same thing. Yeah, like 2 fair value gaps. Yeah. I mean, I think there's some sort of a breaker going on here. So like high taken out, low taken out, and then clearly we see a retracement directly on that location, which would be, I think, this last close candle right there. That would be the breaker, or these consecutive ones if you want to go down or up a time frame. But the main point is to keep it simple. I've backtested a lot of data with BPRS. That's good. Keep that up, because if you convince yourself that works based on like seeing it work, then trust me, it's very, very good. It's good for you, your results, your longevity in this game. Welcome JP Freak, welcome to the stream. You explained the 159. You explained it in the start. Yeah, so I love talking about it because the thing is, guys, I haven't explained everything about it. I say I have, but what I mean by that is in terms of you being able to trade it, the way that I've explained it, you can. What I haven't explained is what it means and why it happens, or how it's fractional and it could work on every other time frame, but you just have to use different. My mouse is dead. You have to use different, like for example on the daily you can use certain days of the week, on the weekly you can use on the weekly you can use certain days of the week, on the monthly you can use certain weeks of the month and stuff like that. What 159 is just a power of 3. That's pretty much it. And what a power of 3 is what's the other term for it? Power of 3 or Judah swing? I think there's a different accumulation, manipulation, distribution. That's what I was talking about. AMD, that's it. So you've got power of 3, and the synonym or the same meaning for that is AMD. So what 159 is the quantified version of power of 3, the quantified version of AMD. It's nothing that I market, it's nothing that I sell, it's nothing that I make look magical or put into a PDF Romeo. But anyways, it's just AMD or power of 3 into numbers. So AMD means accumulation, A, manipulation, M, and distribution, D. Accumulation is obviously consolidation on price where it goes sideways. Manipulation is obviously a fake move up or down before your actual intended move. So for example, if you are long on EURUSD, you need, or you want, you absolutely need, and this is for professional trading, you need a manipulation to give you the liquidity to go that direction. So for example, if you're bullish, you need a manipulation to collect sell side liquidity before going bullish, right? And that's the manipulation, the power of 3 manipulation phase. And then you've got distribution, which means just bullishness, right? Expansion, as we call it, AMD. And is it candle range theory? Yes. So like I said, I found 159 just from backtesting. It was actually it was 3711. It was 3711 because I was doing it through DXY, and I'll show you why. I think the time zones are still the same. No, it's 159 now. Okay. Back in the day, I think when the daylight what's the name? Daylight saver changed, right? There we go. Here, there's an example. So we have here 3, 7, 11, right? So in between those, there's 4 hours, and you've got 3 being the manipulation, 7 being the distribution, and then 11 doing whatever it wants. Because in this case, we've moved down. The point I'm trying to make is that I don't know if it's candle range theory. I want to go through that. I'm not going to insult him. I want to look through his course and see if there's anything special, because the way that I found 159 was just from backtesting. I think I've still got the sheet. I should do. And I was collecting data of when the gaps happened, what happened to that gap when we reached into it, how much of a move did we see away from it, what else? If you were to enter, where would you enter? What time did it happen? I collected all of that, and I did that for around 100 gaps, and I saw the gap being tapped into 7 a.m., 7 a.m., 7 a.m., 9, 7 a.m., 9, 7 a.m., 7 a.m. And I was wondering, like, why does it keep happening at 7, constantly at 7? And then I took that onto a live condition, which meant tape reading in person, and stuff like this started happening, where you see 1 a.m. being tapped into a gap. The previous day you have, let's give you an example. Ooh, this is choppy. It's not, you can see there's tapped into a gap, but it's not clean, right? Previous here day we have 9 a.m. probably into a gap. Yep, there's a gap right there again. The previous day 9 a.m. And also, sorry for jumping from topic to topic. It's mainly because the people that watch my videos, they know what I'm explaining, but I'm trying to give you a full round explanation of it. So It could be candle range theory. I still don't think that idiot made it. Romeo, I think it was Romeo. I don't think he made it. What is it called? Candle CRT. That, I think that's bullcrap. It's nothing more than just power of 3. Like, it's taking power of 3, putting into a PDF and naming it CRT. Or it's like me taking this and calling it the 159 method. Like, it's just marketing. It's nothing different. And if you think about it, all of these concepts, even ICTs, they're just old stuff. Like, for example, market maker models are just what is it? Is it Elliott waves? I don't know if it's Elliott wave or it's some old century old market concept. Are you funded? No, I don't trade on prop funds. I've been trading live. I've been investing on S&P, and well, I do trade on challenge, but I haven't been trading on it. And like I said, I'm trying to get onto the prop fund, I guess, industry, but I've never taken it seriously. It's Wyckoff. Yeah, exactly. Wyckoff. I thought it was Elliott, but it is Wyckoff. So yeah, ICT has repackaged those concepts into market maker models, or the smart money concepts, the smart money tools. Those are Larry Williams's concepts, for example. So it's pointless stuff. Candle range theory, CRT, power of 3, manipulation, AMD, Wyckoff, market make. Like, oh man, it's bullshit. It's bull crap, right? Just trade something that you've tested, have very good risk parameters for it, collect as much data as you possibly can, and stick to it. That's something that I've never done. I've never managed to do that. I'm still working towards doing that, but the things I teach here, I've back tested and demo tested, and I've seen results from, and I've done good with them. But if someone has a lot of time, like, I don't know, for example, a 15-year-old, 16-year-old that has nothing to do, doesn't go to school or goes to school 3 hours a day, doesn't have a job, works part-time, whatever, right? If you have a lot of time, just do what I teach. And you target the 4-hour candle high. No. So that's the thing. I'm assuming that's Romeo's thing, where you target the high or the low of the 4-hour candle, which does make sense. It's an easier target, but when I explained my approach to 159, it was just the nearest gap on the 4-hour. So like, for example, here it's played out, right? When we've tapped into the 4-hour gap here, 1 a.m., the nearest gap would be this. That's not even a gap. The nearest gap would be this right here, which gets traded through literally the next candle, and that's what would be your target. Now, the closer this gap is, the more probable the trade is, obviously. Once we tap into that gap, we actually see a move back into the previous gap, and then so forth, continues going down. I've also said that this gap is not always the best target to hit. You can use 1-hour gaps, or you can use lows or highs. I'm explaining what Romeo teaches. Yeah, I understand. I don't, I think anything that people teach can work if you manage to collect enough data and backtest it enough. But the point I'm trying to make is that it doesn't matter if it's CRT, AMD, power of 3, XM, like, it genuinely does not matter. If you find something that you backtest and you see results from, considering that you're risking well, you're being disciplined, you're executing well, you're managing your trade, you're being confident, you're not being scared, you're not over risking, over leveraging, over trading, revenge trading, whatever, right? If you do all of the proper things with any system, any strategy, any model, I think you can get pretty good results. There's a PDF that I would like to share on my Discord server. It's created by this group of traders in a hedge fund or some sort of firm. It used to be called the Turtles, and they made a lot of money. Like, they turned over a lot of money and a lot of percentage gain every single year consistently. And the people that got trained there, they were called Turtles, and they were given very specific rules, of which, when some of those people didn't follow them, they ended up not doing good. They ended up being on drawdown. They ended up losing a lot of money in that firm. And when that happened, they would blame either the CEO, or they would say that the CEO was hiding rules or strategies for the market to trade. And then you had the same people in that group, or different people in the same group, sorry, or which followed the rules religiously and did very well. So the point is that it's not that your strategy may not work or the system does not work, and I've learned this the hard way, is that you're just not following the rules religiously. Like, you have to ask yourself this. Let's say that I want to risk 0.5% every single trade. I need to wake up at 7 a.m. to check the daily open price for London, see manipulation, and enter on the 3-minute, 5-minute, which takes me precision or precise accuracy to enter off of every single day, and I have to be precise. If I miss 2 or 3 days in a row, or even 1 day a week, that could be a winning trade that could set me apart from losses. And these people never did that. There's a story about these trading turtles that they would show up every single day. Some of them would even sleep in the office. And that's the sort of commitment you've got to have with your rules. You've got to be religiously committed to following what you do. Because when you look at a trading curve in terms of wins and losses, you see a consistent up and down. You may see a swing low, you may see a swing high, right? You may see curves going up and down, but the curve is either consistently down or consistently up. And if it's up and down, sometimes lower, sometimes higher, then you're either changing your strategy, you're not being consistent with your rules, or you're risking all over the place. And that's it. Like, the term consistency means or is defined as doing the same thing over and over again without changing. That's it. Now, that may be scary to some people to do. For example, are you considering to go full-time on trading? I've always wanted to, but for sure, I've been studying trading for a long time. I've made money on the side from it. I've tried to trade a prop fund, making content for free. I've always enjoyed trading. I've enjoyed economics. I've enjoyed understanding how the world works, finance, banking, central banking, investors. I've learned about George Soros, hedge fund managers, Paul Tudor Jones, Jesse Livermore. I know so much about this industry. And the day that I go full time, I'm just going to be here live streaming for free completely for people to watch. So as I was saying, with risk, you need to be consistently religious and consistently accurate with everything that you do. You can't have one day where you kind of do the same thing or you kind of follow your rules. You have to follow your rules, because if you change even a slight parameter of your risk or a slight parameter of your rules, then you'll see a change in your results. It's that simple. Every change has a correlation to results, every single change. And I've learned that the hard way. The fair value gap on the 1 hour was respected. Let me see, my friend. Do you mean this one? This one here? This gap right here, because there's many gaps. Or do you mean this one? There's many. We are currently inside of one, which is being respected. So, yeah. But this doesn't mean anything. We just keep waiting. The anticipated move has already happened. So, at this point, you'd be trying to catch a falling knife. You should be trying to trade and sell. Or, again, it's my opinion. I'm not giving you financial advice, although I've already called out price many, many times and I've shown you how to trade it. I'm not telling you to do it. I'm just saying this is how you could do it. And this is how I've done it, right? This is how I'm going to do it in the future. So, yeah, I'm still bearish. We haven't collected a huge sell side liquidity. Like, this is a swing low, but it's nothing really extremely special. So I'm still bearish. The furthest I'll ever analyze is 3 months, which is still a pretty high time frame to analyze, in my personal opinion, to be fair. It's not ideal to keep doing this on the 3 months, but I do it every now and then to kind of have an idea of quarters. Some people would disagree with me about that, but that's what I use. On the 3 month, I believe we are looking bearish. The previous candle low is closer than the previous candle high. And I also see room for balancing to occur on the downside instead of the upside. At the moment, we are, I believe, just about middle of the range. Yep. So 50% was there. We've had it's the same thing repeating over and over again. Some things that you guys will well, for some of you that may be watching this and really enjoy trading and economics and finance and how markets move, rather than just want to make money from it. Some things that you'll understand is that one of the things is that everything moves according to one another. Like everything. Market price, market events, pandemics, wars, financial crashes, financial booms, right? Everything. It moves according to one another. It can't just when you think that something is tipping over one side of the scale too much and damaging the other side of the scale, that's exactly when both sides are working together. Like, for example, the 2008 crash, it didn't benefit us. It didn't benefit the population. It did not benefit the people. But trust me, it benefited the people that caused it, the people that made it happen, made it possible, that helped it, supported it, and profited from it. That's how it works. If you want, you can look at the trade I took on Euro GBP. I shorted the 4-hour fair value gap. Sure. That's a very, very brave move to trade Euro GBP, in my opinion. But let me see. Let me have a look for you. Have I added it? How do I add it? Oh, there we go. 4-hour. What did you do? Did you sell? It looks like you bought, unless you sold here. Did you sell or buy? It was in premium. Right, so that would be probably this one here or this one here, right? Beautiful, right? Look at the distance on that. Sold. Good. Good. Good, good, good. Very good. 1 a.m., 5 a.m. distribution, 9 a.m. reversal. Next day is 9 p.m., 1 a.m. Yep. That's good, man. That's very, very good. I don't know if you've watched my videos and you've done that, or you've done it yourself. Either way, good. That's very good. This is deep into premium, and like I explained, expanded market, and then you expect some sort of a move down and retracement. I think there's still more room for price to keep going down lower here, and at this moment Euro is the weakest out of the Euro GBP, so I would be trading Euro USD. Not yet, but we'll watch it today. Yeah, take your time. I mean, the main video about 159 is the one that has 20,000 views or something like that. That's the one that blew up, and I'm glad, because that's the main thing that I teach. It's nothing else. So yeah, at this point we're just watching price and analyzing, tape reading. Don't have anything else to do in terms of news. 2nd July today. Yeah, this whole week is full of red, which you kind of want to avoid. Anything, how do I put this? In the context of power of 3, anything within the first few moments of the candle you want to avoid. And that's it, like the candle, right? Not the time frame. The reason why I say candle is because this applies to the 1 hour, 4 hour, daily, weekly, monthly, yearly candle, right? The daily, you want to avoid the first hour of London, for example. The weekly, you want to avoid the first day of the week, so Monday. In my personal opinion, you can trade Monday. There are setups, but sometimes when there's a clean week which you profile perfectly with power of 3, manipulation, distribution, and there's only like 2 news within the week, you want to avoid Monday because there will be manipulation more than likely. Same with Tuesday. With the monthly, you want to avoid the first week and stuff like that. The reason why is because power of 3. There's manipulation. There's moves the opposite direction within the first few moments of a candle's generation before it actually continues the direction it wants to. So with a daily, you will have this, for example, happen, which is the first day of the first day of the new month in July. This is also the first week, so we've had Monday place the high of the week potentially, or the high of the month, and then this week supposedly distributing down, being bearish. And that's an example of a power of 3 with the first day of the week or the first week of the month, etc. Have you tested or saw what happens on 369? I don't get that, because my thing is 159 and it's just based on the time. But with 369, what does that mean? Like New York UTC -4? Because then if that's the case, then how? 3 a.m, 6 a.m? I've heard of it. There's someone on TikTok talking about it, making videos on it. I don't know what it means exactly. Oh, my chat is over my face. Didn't know that. That's better. It's AMD or 4-hour candle. Yeah. Oh, so like the 1 hour version of 159. So for the 4 hour here, we'd have a... Yeah, let me try. I think I know what you mean. Don't even need to fully understand it. Well, let's use the previous one. So this, yeah, okay. We'll use the body of this. So on the 1 hour for the previous one, that would be here. Let's see. I think I can already see it. 3. Well, 2. Yep. And then 6. This is it, I think. Well, I don't think that makes sense when it comes to one 4-hour candle, because one 4-hour candle will have for EURUSD 1 a.m., 7 a.m., 1 a.m., 5 a.m., and 9 a.m. And 369 will be between 3 4-hour candles, so it won't be 1. And that's where my thing comes in, 159, which you can break down to lower time frames. But I don't get it. I don't get 369. I can try and get it, but it personally doesn't make sense to me because it's based on Tesla's not theory, phrase or quote of understanding the universe. If you understand 369, the angel numbers. So I don't think that's got anything to do with trading. I think he's just trying to market something. I'm pretty sure that person sells a PDF of some sort. But either way, yeah, 159 is based on the market times, which is directly correlated to the London kill zone and the New York kill zone. And then 369, I don't know. I have no idea. I have no comment about it. I just think it might work. I don't get it though. It's got a message from somebody. As we can tell, we are still distributing towards downside. I would not be entering at this moment. Don't really have a reason to. Do you only enter trades on kill zones? Yeah, I tried to. I've always tried to. You don't want to be trading London lunch. You don't want to be trading the first hour of London. You don't want to be trading New York lunch. You don't want to be trading market rollover at 5 p.m. I tried to trade within the kill zone because that's the most volatile location. And my trades don't last very long. I think the longest I've held one overall would be maybe a couple of days, but that was a long time ago. And then recently, it's just a couple of minutes, maybe 10 minutes, maybe an hour at max. I'm in the market, cut my risk or take my profit and get out. That's it. Whenever the market conditions show those high probable conditions, then I take the trades. And I think that's a key to day trader. You need the conditions to do that. I've had the conditions the past few days. I just haven't been at my charts, so sucks. Why has your 4-hour candles got different opening times to me? Because you probably have set your... Excuse me, I'm still ill. Your time zone. It needs to be New York. And if it is New York, I'm not sure. But this is mainly one of the main common reasons why people don't get the same times as me on the chart. So you need the UTC -4, New York. EST, always. We don't use anything else. The reason being is we use the New York Stock Exchange as the volatility reason to market price and movement. So, yeah. I hope that has cleared up what you were asking. Excuse me. I think I'll have a quick look at the... I saw back in 2022 you used to trade a lot of pairs. Now, yeah, that's a long time ago. It was because I was on the gold chart. What does the gold chart show? 2, 10, 6, 2, 10, 6. That's weird. Yeah. Yeah. I did trade a lot of pairs back in the day, which I don't recommend. I shared, that was my aggressive days. So when I was trading quantitative systems of like analyzing the first minute, the after minute of news releases, and then giving a probability of what it could do, what it could not do, the direction and stuff. And I used to post that on my trading channel, which I'm not active on anymore because I'm trying to trade different way now. But back in the day, and I'm surprised you saw that actually, I posted it and not many people did. I traded Australian dollar. I traded Canadian CAD USD. I traded what else? I think pound. I think Euro USD. I don't know. I traded a lot of pairs. What do you think about gold? Gold is profitable if you know what you're doing, if you're confident, disciplined, and mentally strong enough to cut your losses quick. But it can also ruin you psychologically and make you think that trading is either too easy to make money or too hard to make money, because it can destroy you just as quick as it can make you rich, from what I've seen and my experience. I'm not rich off of gold yet, but gold is very volatile. Like, it moves like crazy, and I can show you, like, there's a trend pretty much every few hours. So like here, 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 here. These are huge moves if you measure them. 5,525 points. I don't know the measuring unit for gold, but 5.5k, 6, oops, 10, the one before that, 7, the little one before that's probably half, 4. Huge trend over here. So as you can tell, if you risk properly and you trade gold in a disciplined manner, you can make money from it. There's nothing wrong with it. I think a lot of people put a bad name on gold, and a lot of people make it look a lot better than it is, and I'm in the middle. I think you can trade any market as long as you're good. It doesn't matter. If you've got the skill, if you're disciplined, if you've got a system and you've got the data to back up that it could actually work in over a year or 10 years, then do it. It doesn't matter if you trade gold, silver, copper, like uranium. It doesn't matter. Like, literally doesn't matter. As long as you know what you're doing, you're disciplined, you can do anything. Just don't listen to people talking on social media about anything. Like, I'm one of the different ones that, in terms of, like, I'm very open and neutral about stuff. I don't tell you this works, this doesn't work, this works, this doesn't work. I don't speak like that. You'll never see me talk like that, because I understand that these markets are not objective. Like, there's a lot of things going on all the time, of which a lot of people will make money from and a lot of people will lose money from. Now, who's right? Who's right? Is the person that made money right when he says that this is a profitable market, or is the person that lost money right when he says that this is a market you'll lose money from? They both experience that, and then some of them will take it to social media, some of them will tell others that it's not worth it, and it's just like, what's the point? It's just your experience. I've got a very bad experience with pound USD, right? But I understand that sometimes it could be a good, market to trade. So it just depends on what you've experienced. It doesn't matter. I think gold can be good if you know what you're doing. Anyways, I will have to end the stream very soon. If you have any more last few questions, let me know, and I will try and answer them. We are still moving downwards at this point. So yeah, we're still moving down. The sell side liquidity we're aiming for all the way at the bottom here. I'm calling it out now, I think, and I believe that USD could go down low to here. I think so. That's my personal opinion. Don't trade it. If you haven't done your own analysis, I do not advise you follow anyone's analysis. I'm just commentating on it. I believe USD will go all the way down there for the reasons I've stated on Twitter, the reasons I've stated here, and the analysis I've conducted and explained to you. You think it's necessary to watch ICT? No. No, it's not necessary. Or just practice? Yes. Practice is what will make you trade, essentially. If you think about it, and this is a very simple analogy that I was given by somebody. I really recommend him. He's called Oskay, so like OSCAY, Oskay FX or something like that. And he says it's simple. Like, I used to think about this, but he explains it better because he makes a lot more videos than me. NBA players, NBA basketball players, they practice hours and hours. Some of the best ones have to wake up at 5 a.m. and take 100 shots or 1,000 shots before a match, or 1,000 shots every single day for weeks and weeks and weeks and weeks to get good at taking that shot, right? Watching ICT and his lectures is good for information and knowledge, but if you watch LeBron James take shots and shots and shots, you're not going to learn how to take a shot. You're not going to get the feel of the ball and how to throw it properly, how to not throw it properly, what's the best way to hold it, the location of your hand, where it should be, where it shouldn't be, your own experience, right? Because we as humans, we learn best when all of our senses are working together. So like touch, visual, hearing, and I guess in some way feeling. So with trading, you want to get as involved and as, in sync with the market. There's a term in a course that I took which started everything for me called order flow. And it says you want to be plugged to the information constantly. Some of the biggest hedge fund traders, they were constantly plugged to the information. They had phones in their office, phones in their toilet, screens in the toilet of Bloomberg terminal news, screens in their living room, screens in their office, screens in the hallways of the floors, just to constantly check the news, constantly check market price movements and all of that. Now, besides that, they're obviously constantly executing every single day. They've been doing it for years, and that's how you learn. You learn from your own experience, analyzing that and reflecting on it, how you could do better, and just executing. Execution and hard work or diving straight into something will teach you a lot more than 1,000 PDFs or 1,000 courses. Trust me. I have a lot of PDFs. I have a lot of courses. I have gigabytes of notes. Like, the most I've learned, like the 159 method, was from backtesting. I've learned everything that I'm teaching you here from backtesting. Can you explain how are you entering after higher time frame fair value gap got hit? Yeah, like I explained, we have the weekly. So this is the drawn liquidity, as I have explained. This is the target that we've got down here, the daily lows. We've had a weekly gap get hit on the weekly. This is the first week of the month. This is also the first day of the week. So the first day of the month and the week. And that's a high probability high of the week, high of the month location. I personally choose the 4 hour. So once that happens, I go to the 4 hour and I'll locate that gap, which was, well, in this case, it's the 4 hour, which is perfectly fine. You could either use you could do this if you want, is what I'm saying. Let me show you. You can use the weekly gap right there and then go to the 4 hour, which is pretty much the same, but it's more accurate if you go to the 4 hour here and locate that gap. Either way, once you get that higher time frame location, like the weekly gap and the weekly context, which is the first day of the week, manipulation, all of that, I use the 159 method. So I wait for either 1, 5 or 9 to tap into a gap, which in this case is 1, and once it does, I go down to the 5 minute at that location and I wait for a market structure shift, which usually happens from when you're bearish. A high getting taken out for liquidity is called offset distribution, which means matching buys with sells. And then a low taken out, which is sell side liquidity being taken out, and a potential market structure shift, which in this case, I kind of gave an example of this high being taken out and this low being taken out right here, or even, I think it was, you can use whichever you believe is the more accurate. In this case, there's a lot of consolidation and there was a lot of news that day, but you wait for a high and a low to get taken out like this. High, taken out, low, taken out, retracement into a gap, entry there, and your stop loss being at a safe location like an order block here or the gap there based on your backtesting data. For me, it is above the order block within the rejection block. This could have been a stop loss if you really entered it. This wouldn't have been my entry. But yeah, 4 hour, market structure shift, 5 minute, oops. Sometimes the 3 minute is even better to trade off of. A lot of people do that because you see the market structure shift in a much cleaner way. For example, yeah, I mean, I've shown examples of it, but high, low taken out, and then entry on this gap, targeting the 50% of the 4 hour opposite gap. And then distribution after context, narrative, and then this distribution. So power of 3, pretty much. Ooh, talking a lot. I miss MT4. I miss trading on MT4. Yeah. I'm trading on C Trader for a while, but I miss MT4. If you have any more questions, just ask them in the chat. For the moment, we're just analyzing, answering questions, and yeah, I'm giving my point of view of the market at the moment. We're still moving down though, which I like. There's news the entire week today. Today we have news at 2:30. Is that supposed to be? This is supposed to be London apparently. Okay. Is my time wrong or is the time there wrong? Let me see. No, it's 11 right now. Why is this? How is this London? Alright, we'll just do EST. I understand EST better. So yeah, 9:30 a.m. We have news at 9:30. That's New York. We have news at 10 and 9. So we have news towards the end of New York, the entire end of New York Hill Zone, which would be like around here. I believe around that time we'll get a reversal, and in this case there isn't a gap here to anticipate that from. Might be one on the 1 hour. There is. So perhaps we could see a reversal from that gap right there by the time we get to 9 a.m. New York. Perhaps we could see it right now. I could show you what I'm talking about. Best company to trade. Oh, live funds. You mean like your own money or prop funds? Because with live funds, I would suggest IC Markets. I think they're good. I think IC Markets is very good. Oh. Oh. The market makers are listening to me. Oh, no, they're not. So, yeah. Would there be one on the 2 hour? Is it even worth checking? No, there isn't. That's just hurting my eyes. 3? Nothing. That's why I use the 1 and 4 only. Prop as well. 5ers. I'm actually, I think I'll make it after this live stream. I'm supposed to be making a video about the best prop ones, right? The best one in my opinion is 5ers. So the top, complete top, like literally the best out of all of them. Then the second one I think is FTMO. And then the third one I believe is Alpha Capital. But I still need to look more into Alpha Capital. I'm not entirely sure. I think 5ers is great just based on the fact that you can scale up to 4 million and they give a salary option. They've actually even got a physical, I don't know if it's a debit card or a credit, it's a physical card of which you can use to, I don't know, store your funds in, like use it as a bank card. I'm not sure, but they've got a physical card which you can link and use personally, which is sick. I think that's amazing. They double your account every 10% gain. You get a salary. The customer service is amazing. I'm not even sponsored by them at all. I like that prop fund. I really respect it. And this is something that I've been told by them and I researched, and this is the conclusion I've came up with, but I'm not sure if it's true. It doesn't mean I don't believe it, but apparently the money that they give you on live is real. So the funds that you get to trade with is real. It's not simulated. That's what I've been told on email because I've contacted them and I've spoken to them. And it's on their like details, right? The funds are real. They are based in Israel, so the location is in Israel, which a lot of people don't like, they don't support. I personally, I've got nothing to do with that. I just like the things that they offer as a company. But yeah, what do you think about funding traders? Good prop fund, but underrated. Yeah, I think I read about that as well on Trustpilot. Wait, funding traders? Funding traders. Yeah, they've got 1,100 reviews, 4.5 star rating, with 10% 1 stars, 1% 2 and 3 stars, 4 stars is 5%, and then around 83% of those reviews are 5 stars. Oh, good. Yeah, I don't know much about them, but I'd have to look into them because I'll keep making more and more versions of the prop funds video I'm going to make. I'll show you the thumbnail I actually made, and you can tell me what you think, guys. Let me show you. I made a thumbnail for the video, so let me find it. Where is it? Oh, here we go. Look at that. What do you think? I made this for the video. It's not the best. It's not amazing, but you know, I don't do this full time. One thing that worries me is some of these big players on YouTube saying that the prop firms bans them for making too much. Yeah, I think one of them is that Romanian trader. I'm only saying Romanian because I forgot his name and who he is. I forgot his name. He said that he's been banned by many prop firms. I don't know. I don't know if that's a marketing. Maybe it's true. It could be real. I don't know. But it's definitely a marketing tool when you get to that stage or when that happens to you, if it has happened to him. So he's definitely 100% using it for marketing. But if it has happened because he's good, then fair enough. I could very well believe that. There's nothing to be worried about. Prop funds ban people like that, but they also have people that earn consistently 6 figures a month and they pay them out. So, and either way, you want to have multiple prop funds anyways. You don't want to be having just one prop fund and relying on that for the rest of your life. You want to have a prop fund, get 2 or 3 payouts and reinvest that money into a different one or a bigger capital in that one. So for example, get max allocation on My Funded Effects, get max allocation on FDMO, get max allocation on Fivers, which would be crazy. Get max allocation on any other prop firm you possibly can, Alpha Capital, etc. Get a trade copy. I don't know. A software that allows you to copy trades across accounts and then just aim for 1% a month, and that's it. And if you've got 1 million, 5 million in capital total, and you make 1% a month or 2% a month, 1% of 5 million is 50,000. Yeah, I'm pretty sure it's 50,000. So 50,000 a month from 5 million is pretty good in my opinion. I think 10% is 500k. So yeah, okay. How Andrew FX? Yeah, that's him. Amazing thumb. Oh, yeah. I've been told. I've had that pointed out to me. My thumb just, I don't know. I'm double jointed. Thanks, but let me see. Oh god, you guys have said a lot. Jesus. Let's see. I like it because I know CEO and their team and the owner was working in the Wall Street and like they're not bull crapping in Wall Street. Okay, the CEO of Fivers. What do you mean? I don't know. What are you talking about? How's he marketed himself? Does he even have socials? Yeah, Andrew FX has socials. All right, he's got Twitter. He's got a Telegram channel. He's got a whoop.com or whoop. I don't know. Whoop.com mentorship. He talks about it all the time. He posts his student results and he says, if you want to join now, it will be the best time for you to join. Like stuff like that, right? Marketing. Anyways, let's not indulge into that. My finger does the same thing. Yeah, we're special. I mean, I've always thought this was normal. I've always thought that was normal, and I still think it's normal. I think it's just double joint thing with a thumb, so it's nothing crazy. Do you think AI will make us trade obsolete? Will someone make a bot that will be shared and anyone who knows nothing about trading will make huge money? Well, that's already happened, first of all. And if you don't believe me, then one day I'll talk about that. I'll say this. There is a bot out there that if you pay $5,000 a year to, they have a very high winning strategy or rate of passing funds and getting you payouts. Now, why doesn't everyone do that? Because not everyone has $5,000 a year to spare. That's one. And then two, not everyone knows about the bot, right? And then number three, I think they've got a very specific way of entering. Like it's not easy to enter and get the bot. And then three, obviously a lot of people that trade don't even understand trading itself. They would never think of hiring a bot or considering a bot, right? So yeah, there is a bot out there. I think I've got a link of it somewhere. One day I'll talk about it, as I've said. But for now, I'll just say there's a bot out there. It's very good. It's an EA. It's a robot. And I think they deliver a USB to you. You have to install it on your MT4. And it works with specific prop funds only. It doesn't work with some of them. And I know someone that was making constantly 10,000 a month from it. Just like payouts, because it had a high win rate. Sometimes it fails challenges, but it doesn't matter because like the payouts that you make and the money that you make from it just gets rid of every single investment that you've ever lost on your previous trades. So it's a very good bot, and I have applied for it a long time ago, but it also costs a lot. It's 5,000 a year. So it's an investment decision that you should make when you have spare 5 grand a year, you know, and that's definitely something I will be making in the future. Also, we're approaching the fair value gap, which I could anticipate reversal from. I don't want to keep doing months and months of studying, and my skill is useless. Name, yeah. I'd have to find out the name. I should have the link to it somewhere. I forgot the name. We literally talked about it a couple of weeks ago with my friends, but months and months of studying, I don't think that's useless, especially for example, for me, like I enjoy this. I enjoy understanding how to trade and what it takes and what it doesn't take and how to improve, and psychology, discipline, risk management, all of that. Like I enjoy that. So even if I don't do good, I enjoy getting better at it. And one day when everything becomes automated, and which like I said already has, and when more people have access to it, I'll still enjoy placing trades myself. Like my perception on trading is make enough money for prop firms or actual good systematic trades to then have enough to like gamble. And I'm not doing that for the like enjoyment or the dopamine of it. I just want to see how far I can push my win rate or percentage gain, and I want to set a new world record maybe one day. So what I'm saying specifically is, let's say I make 100k, I could put 1,000 or 5 grand aside spare and just trade news releases. I think that would be great. I think that would be fun, and I could do that live. So Happy Hero EA, I know those. I don't think it's that. Let me see. Hero EA. It doesn't even show anything. Oh, it does. Yeah, I don't think it's that. 5. Let me see. 5 a year trading bot. Yeah, it's somewhere. I can find it one day, but what I'm saying is that it definitely exists. There is a bot out there that can make you a lot of money if you have 5 grand a year to spare. It's for people that don't like trading and they don't like being in front of charts all the time. And obviously it's free money, which some people it's unbelievable, but trust me, it's very doable and believable. Where can I put this mic? That'll do. I hope my mic is fine, by the way. I hope everything is good. Excuse the noises. I think we can keep streaming for a bit longer, although I did want to end it. If you have more questions, how long have you been consistent? I haven't been trading in the last 2 months, but when I was trading aggressively, I was being pretty consistent for a couple of months, like 3 or 4 months, when I was trading all sorts of pairs. It's in my Discord server, it's in the channel there. So with prop firms, I've decided to take a completely new approach, which is somewhat through the ICT route. And when you change your trading style, because I believe it's a better way to do it, it's pretty hard. I've struggled and I'm learning through it, but my consistency came from trading quantitatively, like news releases a long time ago, and that was around 4 months or 5 months in a row. I made a decent amount of money, and then I stopped because it was just too intense, too aggressive. So now I'm trying to do the ICT route, and I'm break even, to be honest, with prop firms. I'm minus 2% at this moment, but I've taken like 20 trades or 50 trades. Can't wait for you to stream all the time. We'll be following you all the way. Thank you. I appreciate that. It's making, what's the phrase? What's the quote? It's an in the making process. It's an in the making brand and concept that I'm trying to build. The order flow crew is there for free for anyone to join. The channel here is completely free with videos that I wish I had when I started. And the only thing that's stopping me now is just commitment to trading fully. In the last few days, for example, this was a trading day. There was somewhat of a trading day here, here as well. There's a first tap here into the gap, which was a trading day. And I just haven't been able to be here at 7 a.m. in the morning. I just can't do that because I've got responsibilities that I can't really talk about. And one of them is just family. Like, yeah, I'll say that much. a very tiring morning for me every single morning. But whenever I have time, I can analyze the charts and see that the things I call out play out, and it's just, you know, it is what it is. Because I'm also switching to London. London is a lot more profitable in my opinion. Boogs, nice to see you, man. Nice to see you. I was not expecting you to be here. Hi. So yeah, one day I'll be doing this full time for sure, 100%. And I won't be promoting any PDFs. I won't be promoting any rubbish. It's just going to be full live stream, fully free is what I was trying to say. I will have a coaching program, but that will be when I get the results I need to. I'm not going to do anything like that yet. Still waiting for this gap to be tapped into. Price just doesn't seem to want to, and the reason being is because there's a lot of price erase here. There's a lot of things going on. There's a consolidation block. Consolidation block. What hours do you trade? Is there any times you avoid? Yeah, as I mentioned earlier, I don't trade the London lunch. I try to avoid the period between London and New York kill zone. I do not trade the first hour of London. I try not to do that. I think it's the most manipulative location of London. If you do trade that, you want to be going against it, in my opinion. So, for example, right here, the first hour of London is right there. This candle right there. If you go to the 5 minute, was it? Wait, which London is that? Second. Okay, weird. Is this second? Yeah. All right, whatever. The first hour of London, as you can tell, within, I don't know why it shows 3 a.m. It's not supposed to be 3 till 6. I think my hold on, let me fix my this one. UTC -5. What? There we go. There we go. Perfect. Right. So within the first hour of London, which would be somewhere within 2 up to 3 or 4, 3:30, 2 a.m. up to 4, 10 past 4, we have a little manipulation here. Well, the first hour of London manipulation would be this, which is exactly what you'd want. This is exactly a manipulative move, which is the power of 3. You also take out buy side liquidity, market structure shift, retracement. Look at that. Beautiful. I'll show you. High, taken out. Low, taken out. Market structure shift. After that gets taken out, the next candle is a retracement into a gap entry. This is the manipulative phase of London, and this is why you don't trade it. Let me fix this. The reason why you don't trade it is because this is supposed to happen more times than it doesn't. It's called the Judas swing. It's called the opposite end of the day. So if you're bearish, this is the high of the day, etc. I don't think it will tap the gap. It might not. There's news, so we will probably consolidate up to that point. But what I would like to see is for it to get tapped and then to expect 9 a.m. reversal, which would be perfect. If this taps on the 4 hour, the 9 a.m. candle gets generated in the next 2.5 hours. So if you guys want me to stream up to that point, I can do that. And I can kind of give you a overview of how I see things. But I don't see a trade today, personally. Predominantly because the moves have already happened, and I wish I was streaming during that time. I would have said the exact same thing. I would have broken it down the exact same way. 4 hour gap, manipulation, distribution, all of that. But yeah, to kind of answer your question better, I don't trade the first hour of London session. I try not to. The manipulative. I do not trade Tokyo. I never have, never will. As you can tell, consolidation. And sometimes I'll trade New York. It will be towards the end of it, mostly. But I try to trade the times of which the kill zone is the most volatile, which is in the middle of it, obviously. I don't trade in between. So right here, this is a London lunch. I do not trade that. And I do not trade. This is a fun fact, which most of you will not know. Some of you will. I do not trade 5 p.m. ever. Past 5 p.m. on New York is something we call, I think it's 5 p.m. I might have a note of it. There's a note of it somewhere, but it's called market rollover. This is a time of which I'd still have to research about it, but what I know is that during this time, brokers can manipulate price in certain ways of which is completely allowed, because during that time it's just something that happens. It's allowed. I'm not sure of the entire reason, but that happens. Why that's bad is because you won't get the actual live price data and you won't get the actual price action that you may be anticipating. Or let's say the price is supposed to distribute bearish, and it will towards the end of the day. During that moment on 5 p.m., it can do whatever it wants. And that's because brokers have the power to move price for a certain amount of time and volume during that time. Spread hours. I would assume it's correlated to that. I'm not sure, but perhaps, yeah. You know, tomato, I guess. Semantics. What is this sad music, man? We need positive vibes. No sad. Right. Yeah, this is boring, isn't it? It's trading for you. Trading is not fun. You have to make it fun, but trading is not fun. I'm surprised no one noticed the reflection. I put it there for a reason. But yeah, pretty much broken everything down. It's the same things we did. I'm glad no one pointed out, I guess. But yeah, I've broken down everything. I've broken down everything that I have last time in my videos. Pretty much every stream. Same thing, guys. It's the same thing. What I've seen, a reoccurring theme with people that I've spoken to that have a lot more experience than me. Someone that I know has 11 years. I have like around 5 or 6. They do the same things. They don't change anything. Like, the money may be different month by month basis or bigger as you grow your capital, but it's the same thing, the same model, the same strategy, the same everything from what I've seen. And that's what I'm trying to stick to. That's what everyone should stick to. What is price doing? Why is it doing this? Do I see something there? No. Okay. Well, okay. So when this happens, perhaps there's something on DXY that could explain it. Let's see. And would you look at that? There is. There is a gap right here, guys. SMT. Oh my god. Or whatever these new traders call it. But yeah, there's a gap on DXY. What just happened to my prices? Okay, everything's just gone. That's fine. Right. Yeah, on DXY there's a premium gap. On EURUSD on the 4-hour, we're not inside of a gap. On DXY, we are. So that explains why we're stalling at the moment. You mark Asian range. I don't need to, because I've got the indicator, as you can tell. 8 p.m. up to midnight. And there's a box around it. I've already talked about this indicator. It's called Market Sessions by Leviathan. That guy. I'm long in EU, got a sniper entry. Nice. Nice. You could potentially be early into a 9 a.m. early reversal, I guess. Like 9 a.m. 4-hour candle. But yeah, it's up to you. I wouldn't be long in it. I'd be selling. But you could be long in up to rebalance here. So that's good. Market price is pushing up. I really wanted that gap to get tapped into. It's like it's doing it on purpose at this point. What is going on here? Excuse my nose, I'm still a bit ill. XY is moving down now from that gap. Yeah, so the reason why we are pushing up at this moment is because we have DXY tapping into a premium gap. The cheeky little market asset. And as I explained, the way that I got 159 for EURUSD was through DXY, which was 3711. And at this point, we are at 3 a.m. Gap on the left. And we could obviously anticipate this being the swing high to that. We have a buy side liquidity collection here. And I do believe that DXY will melt right here, will melt. And then New York will probably do something like this. Probably. Again, probably. I'm not telling you what it's going to do, but this is what I anticipate. Let me back down. Oops, sorry. Yeah, oh wow, this is a high probability condition, right? I didn't even notice this gap, these gaps. So when you see again extended markets, when you see an extended market like this and it's left a huge gap down below, it almost has to come back down. So what this means is that there's a huge amount of room and potential for price to come back down. So DXY has room to keep going down lower in this case, which would entail long USD. Yeah, the person in the chat was pretty much correct in my opinion, but we'll see. There's not really a confirmation at the moment. The confirmation for me would be a take off this low right here. That would be a market structure shift after taking out this high, and then an entry would be something like this right there, targeting 50%, which, well, in this case you could target the damn, you could target the dirt, the ground level of the XY at this point. But yeah, we'll keep it at 50 minutes so we can see everything. But this is how I see DXY moving at the moment. Perhaps it will move during news, before. It's unlikely that it will move before, but if it does, then this is how I anticipate it. What's happening there? Oh. This is a bit of an exaggeration, by the way. I would consider it doing something more accurately like this. Something like that. That makes sense to me. Push down, retracement, a bigger retracement, push down. This is Tuesday, which could easily be the high of the, well, we've kind of had a huge low of the week here. And then, yeah, the high, the XY daily chart is looking very bullish in my opinion. So this is why I'm not trading at all. These conditions are not favorable in my opinion. My main analysis happened on DXY. That's good. I think DXY is looking to push higher though. The sell side buy side liquidity on the upside. We've had a low of the week located on Monday here inside of a gap, and yeah, Tuesday could expand. So can Wednesday, in my opinion. You gotta be careful. Price is just not clean at the moment. I think Nasdaq is clean. It always has been. I don't know why this happened. Why did this happen? All I did was click DXY. Whatever. Coffee's gone cold. Finished it, but had a little bit. Finished main. A gap has not been created yet. There would be one on the 3-minute. Yes, there is. This would be entry right here. But the dailies are looking bullish, so I wouldn't be taking this. The daily triumphs the lower time frame. Yeah, I just don't see how price would continue going down lower after this. Anyways, yeah, I'm still bearish EURUSD. That's the main important part. And I would be targeting the 1 hour gap, which is right here. We've already hit it twice. We've tried to hit it a 3rd time, we failed. 4th time, we failed. And now could be the last time that we hit it. And like I said, the bigger the distance between 2 price reference points, like a fair value gap and a entry right here, or current price action, the bigger the distance, the more probable it is that you'll see a move away from it. Like this here, or like this here, or like what it's about to be now, this here. So I think I'll leave it at that in terms of stream. If you have any more questions, just ask them just before I end it. And that's all. I'm bearish EURUSD. We have a lot of news this week, so kind of I'd say stay out. We have CPI, employment change for CAD, Euro, USD, NFB. I think it's the first week of the first Friday of the first week yet. Unemployment rate, just I would say stay out of this week in my opinion. That's what I would do, but it's up to you. If you have any more questions, ask them. If you do not, I will have to end the stream very soon. The order flow crew is bearish on your USD in my opinion. If you want to trade against that, feel free to. Totally fine. Just make sure you journal. But yeah, would you avoid the week of NFP? Yeah, as I said earlier, I would be avoiding the first of any time frame. So like the first day of the week, the first week of the month, the first hour of the kill zones, the first month of the year, even perhaps January. It's a constant loop of avoiding the first of everything because it's supposed to manipulate and collect enough liquidity to distribute for the rest of that time frame. So yeah, I think that's it. If you do take any trades, short ones or long ones, post them in the Discord server. But that's it. I will try and stream tomorrow. I have to make a video now or within the next few hours. I'll try my best to do that. Just risk appropriately, be disciplined, backtest a lot, collect a lot of data, and be religiously committed to the way that you trade. So yeah, thank you for tuning in. I will now end the stream. Take care.